Let's start by talking about one of the biggest problems no one talks about. Basically, traditional banking has been robbing us, okay? In the sense that banks are making trillions of dollars of yields created out of our money that is deposited. Banks basically invest, don't know if you know it, banks basically invest 90% of our deposits. So if you put $100 in the bank, you see $100, but actually the bank takes 90 out of these $100, invests them to create yields, while we, the depositors, get zero, get nothing. We all have money sitting in our bank accounts. You know, we all pay fees, get these zero yields, while the banking system, something like 10,000 banks in the world, is taking all this money, all this growth. And on top of that, while the banks are getting richer, making something like around 10% yearly yield on deposits, the impact on our pockets, on the depositor's pockets, on the everyday person, the impact is incredible, is astonishing. So just imagine that, at least for the Beyonders guys or like the younger guys here, if you had $1,000 in the bank when you were 18, so the average bank knows how to make this $1,000 into over $3,000 by the time you're 30. Now, you're gonna have the same $1,000 you deposited, while the bank will get the $2,000 they make on top of your money. So basically, the traditional banking system has been destroying value on a yearly basis, on a huge scale. Someone touched upon it in an earlier speaker, but basically, a GDP of a country would be something around 2 or 3% growth per year. If you eliminate the banking system, then the GDP is doubled or even tripled. Same goes for our own money that's laying down in the banks. Now, the thing is that it doesn't have to be like that at all. It's not a necessary evil. It's not a reality that we have to accept. Only imagine there was a bank that treated your money as if it was your money, as it is, and not as it is their money. So imagine a bank which is not only free to use, but where your deposits are making constant yields, constantly grow. Imagine that you, like starting today, can get 50% of the interest, 50% of the gains, the profits, your bank is making with your money. Imagine you can, starting today, gain 70% of the profits your bank is making on your money, or even 95%. Okay, so imagine this kind of system. So basically, a year ago, a bit more than a year, we've decided to build a decentralized bank that shares profits with depositors. Okay, shares the revenues, basically, as interest in the depositor's account. That is not such an easy task, and today I'm going to share a bit about the insights we had regarding at least the blockchain part of this venture. Okay. So just think for a moment, why do we even need a bank in the basic sense? Because if someone wants to get a loan or a line of credit, you don't really need the bank, right? You can go to your credit card company and get a loan, or you can find any non-banking debater that will give you the money. You don't really need the bank for that. Same goes if you want to invest. You don't really need the bank to invest. You can go, you can buy stocks from a broker, or you can put money in any peer-to-peer marketplace, lending club, Prosper. Of course, by doing so, you're putting your money in some kind of risk and volatility, and it is not as liquid as it is when it's sitting in the bank and you can take your money tomorrow. But you don't really need the bank to invest. You can just go ahead and do it. So during the process we found there are two main uses, like real use cases for a bank. People need banks for two reasons, basically. One of them is access to capital, which is basically also known as liquidity, which is, before anything else, the feeling that the person has regarding how instant their money is to them. So that's where access to capital starts with. And it ends with, of course, the actual liquidity, being able to call your money today to transfer it to your friend tomorrow. The second thing we found people who are in need for banks is the insurance part, which is not only like the technical financial insurance of losing your money and getting it back, it's the entire concept that you can rely on the fact that if there is a fraud, or if the bank fails, or if you're getting cheated, then at the end you're going to get your money back. So we basically found that these two things, access to capital and insurance, are the key, the basic cornerstones that are the reason that banks are not going anywhere. So there is this kind of a misconception among blockchain enthusiasts mostly, that people don't really need banks, and people don't really need like fiat currencies, and everything is gonna change tomorrow, and there is a big revolution. However, we found that for most people, they don't really care what's the name of their currency, whether it's dollar, shekel, or Bitcoin. They don't care about the name. What they do care about is that the entire system surrounding this currency will stop fucking them up all the time. So that's the main driver, okay, to get something that is more honest. Okay, so we've built an honest bank with better yields because we share the revenues. But what does it have to do with blockchain? Bless you. So I don't know if how much did the earlier speakers talked about it, but blockchain is just the buzzword. Okay, so the kind of more academic term is a decentralized database, right? I guess you spend at least part of your day talking about that. So while a traditional database is just a table, like an Excel sheet, okay? A decentralized database is like handing each user a copy of the table and letting them write to that table at the same time. So think about it kind of like Google Docs when many people use it. So we're all writing together to the same document at the same time. So the blockchain architecture for decentralized databases is basically using consensus. You learned about that earlier today. It's basically using consensus in order to determine that a block can be added to the database, basically. Okay, so Eden spoke earlier about trustless network, right? So we basically use the same, of course, mechanism. The thing is that none of our depositors, none of our customers needs to trust each other or needs to trust us, basically. We as a bank actually act as the miners of the network. Okay, so we are not a centralized organization, we are a decentralized organization, while basically every depositor has a copy of the database and can write directly to the database and communicate with other nodes in this network, other depositors. While we kind of just keep the money, keep the network balanced. Yeah. So we're basically acting as the miners of the network. We're the one giving the calculation, providing the calculation power, and also closing the blocks, thus approving the deals, thus creating liquidity cushion so depositors can withdraw their money at any time. We report all the regulatory part, sorry. We make sure the entire infrastructure of the bank will work well. So we basically just balance the network, making sure it will run smoothly, and doing so by basically mining the blocks. So how does a decentralized bank behaves? So unlike most companies, I guess you've seen here today, who use the Bitcoin blockchain, okay, most of the companies like Kulik and others use the Bitcoin blockchain. So they are basically relying on this one asset called the Bitcoin, okay? We have developed our own blockchain, which is completely separate and has nothing to do with the Bitcoin blockchain. The thing is that by working on a completely different blockchain, we are not, we don't have volatility of currency within our network. So if Bitcoin is an open blockchain in which anyone can buy and sell the asset, thus affecting the value of the currency, the value of the Bitcoin, in our blockchain, no one can change the value of the currencies by buying and selling. So in that case, we also, similar to Kulik, we also represent real currency, fiat currency in that case, and providing this currency with a digital representation. So if you deposit $100, you're going to see $100 in our ledger, and there will always be backed up by $100 real dollars in a bank account and regulated by a central bank, et cetera, et cetera. By the way, working this way sorry, also eliminates the risk of the bank itself committing fraud for the customers. Like Wells Fargo just had a few months ago opening accounts for customers without them asking, or many, many other cases that are happening all the time, like when the bank takes a loan on behalf of the client without asking him, or so many of these stories going on all the time. So this kind of network prevents this entire case. So, basically in a traditional bank, you have to go and open an account for each currency. You know that? So you have an account for your dollars, you have an account for your shekels. On our blockchain, since we basically can work with any either fiat or cryptographic currency. So it doesn't really matter to us which currency is being served. We only know that we keep that value always parallel to the real market value of that currency. Whether you deposit dollars, shekels, or Bitcoin, or gold, or silver, or even rice, okay? So a currency, a commodity, can both get a representation on our blockchain. Now, unlike traditional banking, unlike traditional banks, we do not take some of the deposits, exchange them for other currency in order to get a position, anticipating the currency is going to go up or down. We're not in this game at all. When someone deposits $100 in our bank, we keep it in dollars. We invest it in dollars. We give the yields in dollars. So we were much less exposed and much less risky than any traditional bank. Now, though our blockchain is public, it is a closed blockchain. It is public in the sense that any user, any part of the network, can see the entire transaction history and see the entire operations of the network. However, this blockchain is closed in the sense that no one can affect the value of the currencies by buying them or selling them, thus creating a deficient in supply or demand and change the value. This cannot happen because our blockchain is completely closed for changing the value of the currencies. So unlike Bitcoin, once you buy, once more people buy it, it has more demand, the price is going to go up, the demand is going to go down, the price is going to go down. This can't happen on our blockchain. Okay. So basically, the sum of all the capital in our bank is the sum of all the currencies we serve at a specific time. And it cannot be changed, and it won't be changed tomorrow because there was higher demand or lower demand. Okay. So to conclude, we're building a decentralized revenue sharing bank where basically your account gets the vast majority of the revenues that the bank is making. While deposits in our bank are insured, FDIC equivalent insurance up to $250,000 by the world's biggest financial insurer. And while doing this, your entire capital is completely liquid, with daily liquid. You can withdraw it today, you're going to get it tomorrow. We already have a decent amount of customers that are making very nice yields today. We're in the process of working with governmental officials and regulators in order to complete this exhausting process. We are fully regulated from the get-go, prospectus, rating, everything. So this is what we do. Basically, if you want to get early access, if you want to be part of it, that's my phone number. Just text me or email. I'm going to put you in the waiting list for when we launch, which is quite soon. If you want to take any other part of this initiative, this is my phone. Text me. What we're doing is ending the rip-off. This is what we're doing. Thank you very much. So we started, the question was, what kind of services do we offer? So we started as a savings account that yields, where you can just put in your money and then take it back, and you're going to have more than you put in the first place, than you deposited. And right now we're going towards being a complete checking account, like a current account, with credit card and being able to order the third-party transfer, which means a money transmitter license. Don't know if you know it. Never mind, it's a type of regulation. So yeah, this is our way, being a full checking account. The blockchain, we use the blockchain to solve some very big problems in banking. So one very big problem that the blockchain solves for us is costs. If we need to actually do the settlement on each deal, we are like an old bank. We're going to need 600 people sitting down all day, approving deals. So one thing we use the blockchain for is to do the transactions peer-to-peer, directly within the nodes in the network. That's one thing. reduction of costs. The second thing is about security and the ability to make sure that even we can't fuck up the clients. Okay, so not only that they can't screw up each other, we can screw up with them also. So that's the two main reasons. It just holds the value, but it just holds the value of different currencies, whether fiat or crypto, or smart contracts for that matter, which we haven't implemented yet. But basically, the same idea goes for all. Once we onboard a new currency to our blockchain, we set up where the feed is getting from, where do we get the notion of the value in order to keep it strict. And since we do that, since the moment we do that, we can basically serve any currency. No. The entire operational risk is basically on us, both the credit risk and the investment side. For the customers, we have the insurance. So for the regular depositor, up to $250,000, they cannot lose their deposit. So the principal amount, hakeren, the principal amount is insured up to $250,000. That's a whole different conversation, which is super interesting. I think it's just a bit out of scope. But yes, we have a very thorough investment model that is mostly relies on debt, meaning lending. Okay. Yeah, it's a whole thing. If you were interested, I can talk about it, but I think it's a bit out of scope.
Digital currencies are notoriously volatile. When you store your currencies, is there a reserve currency?
So there's no reserve currency. You know, why isn't there a credit card for Bitcoin? You know, someone talked about it today. Because unlike fiat currencies, virtual cryptographic currencies cannot be rolled back. Okay, so once one person moved the Bitcoin from this wallet to this wallet, no one can come back and say, oh, it was an accident, let's take the money back. Okay, so that's one of the biggest problems in the cryptographic, currencies world. We basically solve some of that because we work in front of a central bank. We work with regulators. So any fiat currency we just report, and any cryptographic currency we can either do one solution is to do a pending kind of deal in which we keep the currency just for a few days. The person who's getting the funds knows he has a 3-day window. So we're using all these trying to use all these methods in order to prove the biggest hurdles in accepting virtual currencies as a bank, because there are many hurdles to prevent that. Other questions? Yeah, go ahead. Not at all. We are not controlling the rate. We only work with currencies that have market rate. Okay? So whether it's a Bitcoin, Ether of Ethereum, or I said rice or dollar or euro, so we always stick the value, and the value is the same as the market value of the currency. So as a depositor, you know that if you put in $1, it will always be $1. It will not be anything else, that the value will not change. Yeah.
Basically, working from home, you are in competition with what you want, right?
Technically, yes. However, remember that we are a bank. We are not Kolu. We are not trying to make new currencies. We are a bank. We provide access to capital, and we provide insurance. So think about it this way. We have no reason to, no reason other than completing the blocks as fast as we can. Because if you want to transfer money to someone else, our goal is to give you the best service. So to make it happen as fast as we can. We have no interest, and we are not, actually we're not affecting any currency, nor we have even an idea to do so. Because, you put in $1, you want it as a depositor to be kept as $1. Same goes for any currency.
Some of the previous speakers mentioned the fact that the tax authorities in Israel have like a standard that you need to pay that on every transaction. Can you please elaborate how you're going to handle it?
Yeah. So let me just start by saying that the legal aspect is huge. There are so many different things we are kind of solving together with kind of the regulators. First thing is for us is to be completely open and honest. So a supervising central bank to which we actually report all the deals, a complete set of bank books, okay, which are in our case open to everyone, but it's a full bank books system, like any traditional bank. Money transmitter license, so any currency we exchange or get an order to pass to third party is regulated. Lending license, so any sum of money we lend is actually regulated. So we're in the process of being regulated in the US right now. We're not really looking at the Israeli regulation. And that's sorry. On one hand, regulators have a kind of a can-do approach, a proactive approach. They want to test it. They are intrigued. On the other hand, many things are unknowns and yet to be solved. So it's always this kind of tension between the two.